In this video, we'll be speaking about extractive business. Extractive business comes under Article 7 of the UAE Corporate Tax. Now, what is extractive business? Extractive business is defined as a business or business activity of exploring, extracting, removing, or otherwise producing and exploiting the natural resource of the state. The word extractive itself states it is nothing but extraction of the natural resources. Now, as you all know, the types of natural resources. Now, what is UAE corporate tax? Under the UAE corporate tax, what does it tell about natural resources? What are the different types of natural resources? So natural resources include water, oil, gas, coal, naturally formed minerals, and other non-renewable, non-living natural resources that may be extracted from the UAE territory. Now, the UAE Constitution considers a natural resource in each emirate to be public property of that emirate. Now, each and every emirate, okay, defines its natural resources in the sense like Sharjah does not have authority of Dubai's natural resources, or Dubai does not have authority of Abu Dhabi's natural resources. Now, under the UAE, each and every emirate is defined separately. So let's see in the upcoming slides what do I mean when different emirate defines its own natural resources. So the UAE Constitution considers the natural resources in each emirate to be the public property of that emirate, and person engaged in the extraction and exploitation of natural resources are typically subject to some form of emirate level taxation. Now, when I say emirate level taxation, this is not corporate tax. This is emirate to emirate. Okay, when a business is trying to extract a natural resources, okay, they are subject to a emirate level taxation. Okay, again, this is not corporate tax, but it's a different tax. Now, how extractive businesses are exempted from corporate tax? So the first point, the person has to has made a notification to the Ministry of Finance in the form and manner agreed with the local government. So basically, the business has to notify to the Ministry of Finance about the extraction of the natural resources in the respective emirate. The person directly or indirectly, wholly, privately or government owned, or a joint venture between local government and a private enterprise, holds or has an interest in a right, concession, or license issued by a local government to undertake its extractive business. So basically, the business has to be issued a license by the local government. Now, the business can be wholly owned by a private company or government owned, or it may be also a joint venture between the government and a private company. But again, the person or the company who's doing this extractive business should have a license issued by the local government to undertake the extractive business. The person is effectively subject to tax under the applicable legislation of the emirate. Now, this company may be subject to the local level tax. The local emirate, they impose some kind of tax on the extraction business in the form of income tax, a royalty, or any other form of tax, charge, or levy issued by the respective local government. If all the above conditions are met, then the income of the extractive business are exempted from the corporate tax. So basically, the first point is the business should notify to the Ministry of Finance about the extraction of the business in the respective emirate. Now, whoever does the business, whether it is private or government or a joint venture between a private company or a government company, okay, that business should be issued a license by the local government. When I say the local government, the different emirate government, Sharjah government, Dubai government, Abu Dhabi government, etc. Third thing, the person should be subject to the local level tax, local emirate tax. Okay, if all these three conditions are met, then the income from the extractive business will remain outside the scope of corporate tax law and will be taxed in accordance with the applicable legislation of the relevant emirate. Now, income from other businesses apart from extractive. Now, an extractive business can also earn income other than extraction. How? The income from other businesses will not be subject to corporate tax if the other businesses is considered as ancillary or incidental to the person's extractive business. Now, not necessarily that an extraction business who owns 100% of the income from the extractive business alone, it can also earn from non-extractive business, but that business should be considered ancillary or incidental to the person's extractive business. A person will not be considered to have earned income from any other business where such other business is ancillary or incidental to person's extractive. The aggregate revenue of such other businesses should not exceed 5% of the person's total revenue. If the aggregate revenue from such other business exceeds 5% of the total revenue, then such other business, even though if it is ancillary or incidental, it will be subject to corporate tax when the total revenue of the other business exceeds 5%. If it is equal or less than 5%, then that business will not be subject to corporate tax, provided it is an ancillary or incidental to the person's extractive business. The other businesses shall be treated as independent business, and the financial statement shall be kept for this business separately from the extractive business. Now, what is ancillary or incidental business? Examples of earning income from an ancillary or incidental business would include rental, earning rental income from letting out vacant parts of a property or equipment used in person's extractive business. Now, extractive business and other business, what are the CT rules? Now, there might be some common expenditure, okay, between the extractive business and the non-extraction business. Okay, now how those common expenditures are apportioned, like common expenses that cannot be attributed individually should be apportioned in accordance to the revenue of the each business in a tax period. Unless the expenditure is taken into account in a different proportion of the purpose of calculating the tax payable on the income of the person's extractive business under the applicable legislation of the respective emirate. In this case, the apportionment shall follow the later proportion. That point, the person will not be able to benefit from the relief of the CT law or use losses from the extractive business to reduce its taxable income of its other business, join or form a tax group. So basically, if there is a loss in your extractive business, those losses cannot be distributed to the other businesses, or this extractive business cannot form a tax group. Where a person that meets the conditions engages another person. Now, if this business engages another person, like contractor, subcontractor, suppliers, or another person, to undertake any of the works of the extractive business, now that business cannot avail the extractive business exemption, and the income derived by this other person will be subject to the corporate tax in accordance with the provision of the corporate tax law. Again, most important thing, the transactions undertaken between the extractive business and the other extractive business to be treated as related party transactions or at arm's length principle will be applicable to any transaction or dealing between person extractive business and any other business. Now, what are the accounting standards? Obviously, an extractive business, when it is exempted from corporate tax, it may use any other accounting standards. Now, if, however, the other business, other than the extractive business, which is treated as separate taxable person, when it will be treated as separate taxable person, when the total revenues of the other business exceeds 5%, that's when it will be subject to the corporate tax. When it is subject to corporate tax, and obviously the business will be exposed to the the accounting standard. What is the accounting standard set by the FDA? IFRS. Any business where the revenue exceeds 50 million, they need to follow IFRS full. If any of the businesses does not exceed 50 million, then they may follow IFRS for SMEs, right? So now let's see an example. Extractive business and the other business. Pure Oil is an oil company based in the UAE. The company is involved in refining crude oil and selling it to the other businesses in the Emirate of Sharjah. The license issued to Pure Oil is from Sharjah government, right? It's from the Sharjah government, subject to the company local emirate tax. Now, out of the 100% revenue, 91% of the revenue is generated from the extraction business, and the 9% from the other business, which is ancillary to the extraction business. Now, what does this rule if the other business exceeds 5% of the total revenue, then this business will be subject to or exposed to the corporate tax. Now, answer: Pure Oil's income from the ancillary activity subject to the corporation tax, while its income from its refining business is exempt. Now, next example, same example, but instead of 91, here it is 95%. Instead of 9%, now it is 5%. Now, this is within the rule. What is the rule? 5%. The other business should not exceed 5%. So, none of the income will be subject to corporate tax. What is the answer? Pure Oil's income from its ancillary activities and its refining business is exempted from the corporate tax. Thank you for watching.